Good morning and a warm welcome to the discussion on career opportunities in investment management, jointly organized by the CFA Institute and the Hindu Business Line. The importance of the subject matter of today's discussion is very clear from the nearly 3,000 registrations that we received for the event, as well as the over 300 pre-event questions. Increasing income levels is drawing more investors to financial assets. Rising variety and complexity of investment products is giving rise to the need for specialist professionals with niche skills. This makes investment management a lucrative career option for young professionals. To tell us what it takes to get a break into this world of managing money, we have four eminent panelists joining us today. Mr. Vidhu Shekhar, Country Head India, CFA Institute, a seasoned financial and investment professional with over 30 years of experience. Mr. Anil Gilani, Head of Passive Investments and Products, DSP Investment Managers, who comes with experience in risk and quantitative analysis as well as credit research. Mr. Mirain Lodha, Head of Executive Training, CRISIL, who has worked in financial analysis and forecasting and has also implemented technology-enabled research products. Mr. Lokesh Mrik, Vice President, Investment Research, State Street Global Advisors, who works with global investment teams across asset classes. A warm welcome to all the panelists. Without wasting much time, let's get started right away with understanding investment management. I'd like to start with Mr. Vidhu Shekhar. Sir, how would you like to define investment management? Because it's a very broad term. And what kind of roles do you think are available for young professionals and students if they want to choose this career path?
Thank you very much, Vardhini, and a warm welcome to all of you on a Sunday morning. Giving up what you should be doing on a weekend shows the importance of this topic for you. And also a warm welcome to my co-panelists, Anil, Mirain, and Lokesh. And we hope to spend 1 hour with you chatting about all these issues. To start with, when we asked you for your registrations, you had the option of putting in some questions. And I saw that a lot of people were asking about investment management versus investment banking. There seems to be a lot of confusion between these two terms. And I don't blame you for that, because in our industry, people use terms loosely. So the first thing I want to do is to tell you what is the difference between investment management and investment banking, and how the investment management industry fits in with the overall financial services industry. So as you can make out from the term, investment management is all about what to do with your investments. Everyone knows what investments are. You invest in stocks, bonds, commodities, and so on and so forth, so that you are able to meet your long-term financial goals. And anybody who is involved in this process is an investment management professional. Now, in investment banking, on the other hand, is the part of the industry that serves corporations that are raising money. Their financing decision, as they're raising money through IPOs, follow-on issues, bond issues, and so on and so forth. So the customers of investment banking business are corporates, and the customers for investment management business are people who are saving and investing. Now, once we have clarified that, within investment management, there are, like any other industry, we are a very complex ecosystem. Over a period of time, work has been divided up amongst different specializations, and there are all kinds of different companies doing different things. So it's not easy to get a proper understanding of this whole system very quickly. But what we thought we can do today is to get you started, so that then you can go and get more information on your own. Now, at one end of the investment, as I already said, the customers of the investment management industry are those people who have money to invest. Now, these in our industry, we call them asset owners. Now, asset owners can be either retail asset owners, people like you and me, individuals, or they can be institutional asset owners, like a temple trust or a college endowment or a pension fund. which has a large corpus of assets, financial assets that they are taking care of in order for a specific purpose. So there is a distinction between those who are asset owners and those who are asset managers. Now, asset owners employ asset managers. The mutual funds, they are asset management companies. There are many kinds of asset management companies, private equity funds, and so on and so forth. And my other co-panelists will take you through some of these details in time. Now, uh, between the asset owners and asset managers stand the so-called wealth managers, the whole wealth management profession, because they are the ones who are trying to help asset owners, whether they're individuals or large institutional asset owners, to decide what should be their, what kind of assets they should invest in and how they should go about the investment process. This is called asset allocation. So I'm just giving you a quick brief, overview, and we will talk more about this. And across the industry, you will find that amongst all these companies, asset owners, asset managers, investment banks, you will find many different roles. In the CFA curriculum, we talk about investment analysis, investment recommendation, and investment action. That is the analysts who perform an analysis of various kinds of investments. People who recommend, we have already talked about asset allocators and so on, and then the fund managers who manage these funds, various kinds. Over and above, there are lots of specialist people like economists, okay, like investment performance managers, accountants, and so on and so forth, who are required to support different parts of this industry. Plus, you have client relationship managers and so on and so forth. So it's, we have other resources which probably Anil and the other panelists will talk about a little bit more. But you need to understand this big picture, and then you need to go in and check out what are the specific roles and why these roles are important and what should be your approach to your career.
So in the big picture that you have talked about, we've chosen three other panelists from three different areas. I hope they will be able to give some more insight into their respective roles as to how it has, how they have evolved and what it means to them. So, Mr. Lokesh, I would like to ask you, you're into investment research, which is considered the very heart of the investment management industry. Can you describe what investment research involves and what is a typical day in the life of a research analyst? You can probably use your own example to enlighten the students and the professionals.
Sure, thanks, Vardhani. Yeah, so to define it in simple terms, right, to start, it's a process which involves studying of individual securities and funds in order to come up with an investment recommendation, that is whether we should buy, hold, or sell a particular security or a fund. Well, however, it's this field is wide, and as Vidhu mentioned, it's there are it's complex, and there are numerous ways to approach the research process depending on which investment domain you're working on. However, I would broadly define in it the investment research process in two categories. The first is the fundamental versus quantitative research, and the second category would be the bottom up versus top down research. Now, if you look at the fundamental research, analyst role, analyst in the fundamental research would require to study a particular security thoroughly, and study its financial statement, its earnings, cash flow, balance sheet, and as well as they're required to kind of maybe attend management calls, interact with the management of the particular company which they are covering. They're also expected to do a lot of financial modeling in Excel, where they'll be projecting the cash flows and the earnings of a particular company which they are covering into the future, so that they can arrive at a particular valuation. As well as a fundamental research analyst will also be interacting internally with the portfolio managers to help them understand or take a particular position in their portfolios. They are also expected to at times interact with clients to help them explain why a particular recommendation is given by a firm or by a particular analyst. So this is how the fundamental research approach looks like. On the other hand, if you look at the quant research analyst, quant research analyst would pick up a few characteristics which is expected to drive returns for broad set of securities, either in equities or in fixed income, or in commodities. And what they will do is, right, they will study those characteristics historically. They will process huge amount of data, and they'll try to come up or estimate a particular pattern or a model based on a certain mathematical concept with a certain certainty. So a quant research analyst is required to have very good programming skills, good mathematical and statistical concepts, as well as on a day-to-day basis they are expected to process huge amount of data. You're talking about terabytes of data, and they're also expected to kind of refer to the cutting edge research literature so that they can constantly enhance their models, right? In quant research, it's the models. If a model is profitable, right, it may, given the competition in the market, it may not be profitable or viable for a very long time. So quant research analyst is expected to undertake a constant enhancement of their models. In addition, they are also expected to you know uh, present their findings internally to the investment committee and the portfolio managers. And at times they're also expected to interact with clients to make them understand how the investment process of their particular model looks like, and why it is in a certain way.
Okay.
And if you look at the other second category, which is top down versus bottom up research, a bottom up research would entail comparing or studying the securities, and taking a bet whether this particular security would do better than the others. For example, let's say, take an example of Nifty 50, right? In bottom up research, and a research analyst, whether it's quantitative or fundamental, they will study all the 50 securities individually, and they will come up with a recommendation to buy a particular, let's say, 10 or 20 securities, and not buy other 30 securities. However, with a top-down approach, a research analyst is expected to understand where we are in the macro and business cycle. How the economic environment is looking like, and how it will impact the business environment going into the future. And accordingly, they will take a call whether to invest in a particular sector or region, instead of investing in a particular security individually. For example, today we are in the middle of a fight against COVID, and I mean, it's just an example, hypothetical example, don't consider it as an investment recommendation. In the India pharma sector is a big player in the generic market, as well as we produce 50% of the vaccines globally. And next year, as we take our fight against COVID globally, right, Indian pharma sector is probably expected to play a major role. And an analyst can come up and recommend, let's recommend pharma sector as compared to banking sector, as there may be certain losses coming up there. So this is another example. This is an example of a top-down approach, how a top-down research recommendation would look like. And research analyst can combine top-down with bottom-up. They can recommend a certain sector, and then the bottom-up research analyst would probably recommend certain securities within that sector.
Okay.
And top-down versus bottom-up research can be approached via both fundamental and quant research analyst. Yeah.
Okay. Okay.
On the
Mr.
data. Yep,
I'd
yep.
like to bring in Mr. Miren here, actually. There is this credit research, which is a big area. Is credit research also part of investment research, sir? Because is it only about assets, or is it also about the debt side?
Yeah. No, I think that's a pretty interesting question. And, typically, if you look at the aspirants or the students, when they think about, investment management as a career option, the first thing which comes to their mind is equity research. And, you know, yes, I mean, sure, equity is a more exciting asset class. You have the daily ups and downs and the volatility, which, really excites you. But I'm sure at least my co-panelists will agree that in the current situation, at least, the debt markets are not far from equity in terms of volatility. But yeah, I think, if you look at things very dispassionately, debt market is pretty big in India, and it offers a huge opportunity to pursue credit research as a career option. Uh, if you look at just the mutual fund AUMs, I think 2/3 of the AUM is in debt securities, which means that it's almost 2x of the equity AUM. So it's significant, and I think it's one aspect which at least somebody who's looking at making a career in investment management should not overlook. The other interesting trend, and which really offers a lot of opportunity in credit research as a career option, is the fact that financial disintermediation in India is just started. You compare us to any other developed economy, and in terms of debt market penetration, we are just not there. So which means that if you're looking at a long-term career option, this is one area which will keep going and offer you a lot of opportunities to build a very strong career here.
Okay.
Yeah.
So Mr. Anil Gilani here is from a very, is from the mutual fund industry. It's a very, very popular investment avenue. So, Mr. Gilani, is this portfolio management? That is also another, bigger area which comes under investment management. So, what are the opportunities on the portfolio management side, sir? Mr. Gilani, can you hear me? Okay, there seems to be some technical issue with Mr. Gilani. Okay, so we will get back to Mr. Gilani when he is available. So we've understood now about what actually the investment management industry involves. It involves research, which is either equity research or it could be credit research. And as Mr. Vidhu Shekhar told us, it is a very, very broad-based thing, and it depends on your skills and where you want to specialize. So that brings us to the next round of questions, where we could probably check with our panelists on what kind of qualifications and skill requirements the jobs that they just talked about involve. That way, I'd like to ask Mr. Vidhu Shekhar, so what kind of qualifications help students and young professionals in getting a break into the investment management industry? And obviously, everyone is interested in money, the growth, the career growth options, and the work-life balance and the commitments that these kind of professions require. Can you enlighten them on that, sir?
Sure. Thanks. You can hear me, right, Vardhini?
Yes, I can.
So, see, we generally, for our own members, the CFA candidates and CFA charter holders, we find that they're employed in three broad kinds of firms. The first is the domestic, what we call the buy side and sell side, which is the mutual funds, which is the term that buy side is used for them, and the brokerages, right? People who do research on stocks. For this, which is focused on the domestic sector, that is the Indian market. And then we have a large number of people who work for the multinational banks and investment firms with their India centers. So practically every large, global firm in this field is, has a large India center, and we often find that they would have the maximum number of their employees in their home country, but the second largest number of employees in India. Okay, you find that Goldman Sachs may have the largest number of employees in US, but second largest number of employees in India. Similarly, Deutsche Bank may have largest number of employees in Germany and second largest in India. So these people are these companies, and including some of the consulting firms like and research firms like Morningstar, MSCI, they are large employers of professionals. And then
so would they require this kind of qualifications like a CFA or a CA or a top tier MBA? So what do the students prepare themselves for if they want a career?
Right, so I'm coming to that. So, and the third type of employer are the wealth management firms, okay, which are doing wealth management of different types. Now, typically you see that people come in with a broad range of basic qualifications. Many of them are chartered accountants, many of them are MBAs, many have an engineering degree plus some kind of a finance degrees like a CFA. and so on. So usually, people, when they enter the industry, they have a basic degree. And on top of that, they get a professional credential. In the past, what used to happen was you would never sit for an exam like a CFA or an FRM unless you are in the industry and you are practicing. You are, already working as an analyst or a fund manager and so on. So these credentials are not used for gaining entry into the investment profession, but they are used to improve your knowledge, skill, experience, etc. once you are inside the industry. Okay, so there is a distinction between the qualifications which are required to enter versus the qualifications that are required to grow. Does that answer your question, Vardhini?
To an extent, sir, but there were a lot of questions as to what exactly, whether you can come in with engineering or whether you can come in with a BCom, or what is the first job actually required. So
I think is back with us. So let's go back to him and
yeah, sir. Mr. Anil, probably you could answer this question, and also the prospects for portfolio management, and how can one pick up specialist skills and this kind of skill requirements which portfolio management or newer investment avenues like hedge funds and real estate funds, all this is part of investment management. So what qualifications and skills do professionals or students have to develop to enter these areas?
See, from the perspective of portfolio management, you very rightly said that there is a very fast emerging trend. So it's not just as a mutual fund company, it could be newer avenues like hedge funds or commodity related funds, or we have got a lot of focus of asset management, investment management, even in life insurance companies. So the broad whole context of investment management is very much expanding. Now, to gain a good insight into this type of a profession, one needs to have a very robust understanding of how company balance sheets work, what are the drivers of asset class returns and risks. So considering the entire prospect of the getting a better understanding of how asset classes are driven and what are the drivers of risk and returns from that asset class, a good curriculum like the CFA program offers a complete picture of starting from equities, fixed income, alternatives. And what I felt is that when I did the CFA program, I come from a little bit different background. I'm a CA first by education, so I had a little bit understanding of balance sheets, company analysis, etc. But after completing the CFA program, it gave me a much more in-depth understanding of financial analysis, of looking at the way in which the multiple angles of businesses are incorporated in the financials of the company, and from an overall portfolio manager's perspective, how to incorporate that into your business decisions or your investment decisions. So whether, like as Vidhu mentioned, that you are trying to start your career into the world of investment management, or you are looking to further enhance your career progression within the field, this type of knowledge enhancement is very, very essential. And the type of roles, I'll come to the next part, what you mentioned, like the type of roles that typically one could look at is not always that only one single role, fund manager. There are multiple other roles within the investment management industry. So I'll just highlight one key aspect, like for example, risk management. It's a very integral part of investment management, and it becomes very crucial input to the entire investment process. So there are many very sharp risk managers who come with a robust background and a CFA designation. There are many who are into research analysis. They never want to do portfolio management, but they just want to be sector specialists. They've seen multiple cycles of that particular industry and the companies operating in that industry, and they can gradually become the experts in those sectors, but they don't have the intention to manage a portfolio. So these are 2 or 3 very different aspects of the overall investment management business but each requiring a very subtly different skill set and way of operating and the way of analyzing.
Okay, okay. Mr. Lokesh, you told us about the different kinds of research, like a top-down or a bottom-up or a buy-side or a sell-side. What kind of skills? Because we've had pre-event questions asking us whether you need to have real good mathematical skills if you have to do research, and what kind of skills apart from the normal qualifications, is there any specific skills that you look for when you hire someone as a research analyst?
Yeah, that's a good question, Vardhani. So in addition to the qualifications and required exposure in the field, we specifically look for very strong analytical skills, the problem solving ability, ability to understand the basically complex processes, news, and be able to generate applicable solutions. So whenever we are interviewing someone, we kind of make sure that we are testing the analytical skills. We can make them program, give them an assignment, or have them present particular idea, and during that process we'll try to understand their problem solving abilities. So I think that that's one of the key aspect when we look for a research analyst, whether for fundamental or for equities or for quantitative. Sorry.
Okay, okay. Mr. Miren, you are on the training side. You head executive training for CRISIL. You see a lot of young professionals, especially in banking and financial services vertical. You also run a wealth management course at CRISIL. So what skills do you find lacking with the people, like when you see these industry people coming to you for training? And, is there a gap between the academia and the industry? What is your thoughts on this? So how should one convert academic qualifications into actually employable skills?
I think if you really ask me, what I see as a gap is the ability to have a more rounded perspective of what's happening in the financial markets. You know, I mean, every asset manager, I mean, if that is the career option you're looking at, every asset manager, needs to understand that, all the asset classes are pretty much interlinked. Now, at least at the early stages of the career, what I have witnessed or experienced is people tend to be too focused or too narrow in terms of just looking at their own domain and maybe ignoring, what's happening in other asset classes or maybe, in the broader financial markets. And that's very important because, if I'm an equity analyst, I can't just focus on the equity markets because, what's happening to interest rates, what's happening to fixed income yields also has an impact on my equity portfolio performance. So in that sense, I need to have that broader vision, broader perspective of, being able to link the macro with the business scenario and then to the asset class performance. That is, if you ask me, the piece which is, really, really missing. And, how do you address, I mean, while yes, you need courses which are more connected to the industry. I think when somebody is selecting a professional course as a, as a medium to drive his career, they should look at courses which offer, a more holistic coverage of the entire financial markets. That is the first thing, which I would look at. The other thing is also that, the course content, should be absolutely updated to, what's happening within the industry. That's one piece which I feel where at least, so even if I look at, some of the MBA courses, the content remains not updated for a period of 5 years, 6 years, 8 years. I mean, that's not how, the courses should be offered. And which is where at least, some of the professional courses that you see, they are slightly different. But this is another thing which students who are aspiring for a career should look at, the updatedness. And if I just give an example, I mean, if you look at the entire business landscape in India, and if you're doing a lot of fundamental research, you'll realize that if you look at the infrastructure industry, there have been completely new set of business models which have come in the last 5-6 years. The entire regulatory landscape, the government perspective, everything has changed. Now, if I'm looking at content which is, more than 5 years old, obviously when I come into the industry, I'm going to feel out of place. So, this is broadly my suggestion for students who are looking at getting a head start into the investment management. They should look at options which are one, comprehensive in terms of their coverage, and second, they are absolutely updated in terms of the information and the content and the the course structure as well. What is getting covered in the course.
One important question as we talk about qualifications and skills, is also the compensation structures. So is investment management a really well-paying profession, or how should, when one chooses a job in this area, so how should one approach the whole aspect of compensation? Is it only the money that matters? Is it the profile that matters? Any of the panelists can take this question.
So hold on. I just want to say something about our approach to compensation. Okay. Now, this is a profession, and this is a profession like all the other profession. The investment profession is just like the profession of medicine or law or accounting. Okay. And I think people should look at their jobs as a vehicle for their profession, right? You're not just working for the job that you have right now. You're part of the profession, and you have a whole career, 30 years, 40 years career in your profession. And during that time, you will develop. In the first part of your career, it's mostly about learning, about being of use to somebody, right? When you first enter your first job, you're really of no use to anyone because you have learned something from the books, but it's not clear what you can contribute to the company, right? And as that becomes clear, your value starts rising. So at the beginning of your career, you have to know, how is this helping me become a better professional? Of course, the job should pay according to the market, right? If not, then you will find somebody else who is prepared to offer you more. But you should really focus much more about how are you gaining and growing from your job in becoming a better professional. So if you keep that criterion in mind, then you will not make mistakes. We find often that people take the wrong jobs just for a few thousand rupees more. And if you understand the industry, if you understand the career paths that are available in the industry, and you understand what you're getting in terms of exposure, learning, and so on and so forth, you will be able to take the right decision.
Okay. And is it also essential?
I'll add one more point, if
yes,
permit, on
please.
the compensation part in asset management.
Please.
I've been in that industry for the past 20 years.
Yeah.
One important thing, carrying on further, in addition to what Vidhu mentioned, is that in investment management, if you are into a particular field of expertise, then you are bound to be very adequately rewarded for that in terms of a compensation. So if you create the right building blocks and start having a robust professional grip on that particular area, then you're bound to be in a very comfortable position in terms of a compensation. So if you compare it with some of the other professions which we discussed, I would personally feel that one would land up in a very good position over there.
Okay. There's also this doubt in the minds of a lot of students, like that they have specialized in biology, or they are engineering graduates, and is it possible to move to finance? Because we see a lot of profiles. If you see the best managers, if you see their profiles, everybody says it's IIT, IIM, and things like that. So Mr. Lokesh himself is from IIT Madras, so I thought he can throw some light on how moving from engineering to finance works.
Sure, Vardhani. Yeah, so definitely we have many team members, and I've seen many eminent industry professionals who come from different backgrounds, not necessarily coming from a particular a business related background. And I myself was a, as you mentioned, tech graduate. However, but one thing which we look is we need to see very strong demonstrated interest in financial markets or economics, or that you passionate about this field and area and why it interests you. I think that's more important. It shouldn't be just about this particular job is paying you more than your current tech role. So I think that's the primary criteria. Myself, while I was studying engineering, I had multiple courses in economics and finance. I think 20 to 30% of my curriculum was in that field. And to my surprise, my faculty members in core engineering were actually supportive. They said, like, do whatever interests you, and that's what we wish for everyone. And we look for the same qualities, and while interviewing candidates from any background, whether they're studying biology, commerce, business, engineering, it doesn't matter. If you have strong interest, and if you can demonstrate good analytical and soft skills, and you can and of course CFA is one of the very big criteria for us to select candidates. If you're past level 1 and level 2, if you're pursuing CFA, that becomes an added like benefit when you are entering the market, or when you're interviewing. So yeah, to summarize, you need to demonstrate strong interest. It doesn't matter where you are coming from.
Okay. Uh, there is a big question in the minds of a lot of youngsters and students about the future of this industry. So today we are all mid-career professionals, and we've crossed a certain level, but there are students who are probably just starting out and who have 25-30 years of career ahead of them. Mr. Vidushekar, would you like to tell us is the future of this profession safe? Is it like recession proof? How has the investment management industry managed COVID, for example?
You see, ups and downs are there in every single walk of life. Okay, but the investment industry is not going anywhere, going away anywhere. Okay, so we have right now more than $100 trillion in assets under management globally. Okay, and this is expected to grow quite significantly over the next few years. So as long as people are investing, as long as companies need money to for their future purposes, there is room for this industry. And as I've already explained, those three areas from where this growth is coming, there is actually a talent shortage. We just finished our wealth management conference, a 3-day conference yesterday, and speaker after speaker was saying that it is hard to get the right talent. So there is, for if you are prepared and if you are positioned properly, there is absolutely no problem in finding jobs in this industry. But of course, that is a big if, right? What are you doing? What are you doing in order to prepare yourself first to enter this industry, and then to climb the ladder? So the industry is not going anywhere, regardless of what happens. The markets may go up and down, and you may see that the trading volumes in the markets may go up and down, but that doesn't tell you much about the need for analysts, wealth managers, portfolio managers, and other specialists. So that the industry is always going to be around.
Okay. Also, when we talk of the future, we know that today investment products are becoming more and more complex, and there is a lot of legal requirements, compliance requirements, and all that. So is the future also about, Mr. Anil Gilani, I'd like to ask you this, is the future also about, having investment managed professionals in areas such as compliance and sales, because it's becoming a very highly complex product structures. So would you advise that investment management professionals could also find roles in compliance and sales?
Very good question, Vardhini. I would like to take it in two parts. One is sales, one is compliance, because both have slightly different aspects to the business. From sales, 100%, it is very, very crucial, very important that people should come from a very deep understanding of financial markets. Like, for example, most of the people in our firm who are from the sales side, who are part of sales function, we try to look at themselves as investment sales functions. It's not like, just, okay, you are, as a relationship sales person is very different. You are an investment sales person. And there are so many people who are in either asset management business sales or within wealth management side who are in sales side. Many of them are part of our CFA community, or they are candidates in the CFA program L1, L2, L3. So in the sales function, very, very clear about it that unless you don't have a very robust understanding about the investment field, about the drivers of investments and the asset classes, you will not be able to communicate that to your end client or to your distribution partner or to the corporate treasury who is looking to invest into your products. On the compliance side, yes, no doubt, the complexity about understanding of financial aspects and all has increased significantly. But in my personal view, that on that field, it would still be a good to have, because there the little bit requirement of the skill sets is very different. You need to have a different eye for detail in terms of analyzing the regulatory framework and getting a grip of how it's getting applied to. So no doubt you need the grip of financial markets and your industry segment, because if some new regulation comes out and you don't know how it's actually going to impact your business, then it's of no use. So it's required over there as well, but I would feel it's a good to have, versus in the sales function, it's a must have. I mean, try to split it into two parts.
Okay. Mr. Miren, what about risk management? I mean, COVID itself has taught us that risk management is becoming a very, very important factor for all professions and for all industries. So do you think investment management in future is also about risk management?
Yeah. No, I think so you're right. If you look at risk management, I somewhere have this feeling that this is going to be a fantastic career option when you look at the next 10, 20, 30 years. I think the best time to be a risk management professional is right now. And let me just explain why I feel like this. Let's look at the volatility which is there around us. And while yes, COVID is one thing, but even if you keep the last 6 months aside, I think last 3-4 years, I think the volatility has definitely gone up multifold. And yes, equity markets, they've always been volatile. But you look at what's happening to other asset classes. You look at fixed income. I mean, the sort of fluctuations we've seen there. So we've seen interest rate cycles becoming much shorter. Correct. So the earlier interest rate cycles would be around 6 years. They would have come down to about. So now your trend changes in 2 years itself. You've got a huge fluctuation in GSEC yields itself, the benchmark rate, and then the spreads are changing. I'll not get into the technical aspects, but the point I'm making is you look at any asset class, you look at gold, you look at real estate. I mean, every asset class is seeing the volatility going up, and which means that the risk management professionals would be required to ensure that the risk is managed within the tolerance levels. So that's one reason. The other reason is if you look at just the number of defaults which are happening, credit defaults in the last couple of years, that has again led to a change in the entire way this industry functions. You had 26 issuers defaulting in a span of last 2 years, and this is unprecedented. Nothing to do with COVID. A lot of these defaults happened pre-COVID. And the mutual fund industry had to take a hit of almost 19,000 crore rupees on a day to year, and that's a significant number. Now this is the second reason, and if you see the third reason, I think the regulator has become more stringent in their stance, and cost of non-compliance in general is going up across businesses. Now, when you combine all these factors, what's happening is, all asset management companies, they want to focus on risk management. I mean, I'm sure Anil will agree with me, AMCs typically used to have a pretty lean risk management team at least a few years back. That team is being beefed up now, and the sort of focus, I mean, risk management is absolutely in focus in all the discussions, strategies, and so on. So based on these trends, what I clearly see is at least over the next medium term, risk managers who have the right set of conceptual understanding, having a good understanding of the financial markets, they'll be in a sweet spot, and they'll have a lot of opportunities to grow and progress in their career.
Okay. Mr. Lokesh Mrig, I would like to ask this question to you. It was also a very popular question in the pre-event. What is the role played by artificial intelligence, machine learning, and data sciences today in investment management? And Is human skills going to be replaced by all this in future? I mean, how safe is the profession that way?
That's a very interesting question. So, no doubt, artificial intelligence is being, kind of increasingly adopted by investment firms globally. There are two aspects to it. First, the firms are using artificial intelligence or machine learning to enhance their front, middle and back office investment processes. In addition to, integrating them with their investment research and portfolio management, efforts. I'll take a few examples. For example, firms can, enhance their risk management process by using artificial intelligence to detect any suspicious trades, instead of a lot of analysts manually going through or screening, looking for suspicious trades. Natural language processing, which is a subset of artificial intelligence, is now increasingly being used actually to generate, client reports or risk or market commentary. And artificial intelligent, bots, as we see, chat bots, they are being used by wealth management companies to have create a virtual relationship managers to answer their more, day-to-day queries before, they ultimately reach to the human, the relationship manager. And within the investment research also, there's a lot of interesting, developments are happening. I'll give you an example. Let's say one global bank has, set up a data science team in US, and what they are doing is they're supplementing their fundamental research efforts with the data science. For example, let's say an analyst is covering Apple stock in US, and they are absolutely not sure about what's happening on the consumer front right now on the ground with this, COVID situation. There's so much uncertainty. And if Apple has to launch a new product, how would that launch go? And, how many consumers will actually visit the store given the COVID situation? So what they did is they went to the data science team, and, the data science team took a lot of, geolocation data. It's a data which is produced by mobile phones of consumers when they're visiting the stores. So they studied the geolocation data produced by consumer mobiles throughout the world, and they try to understand how many consumers have been, visiting the malls or actually the Apple stores globally, to give an idea of, to give an idea to their fundamental research team as to how, the new product launch may go about. So that's just another example, of, the artificial intelligence being increasingly utilized.
Okay.
And this trend will pick up quite significantly because, both technology and the data storage required to apply these tools are being easily accessible with the help of cloud technology. If you have heard of the Amazon and Microsoft offering the cloud technology, and so you can yourself go and set up a cloud, an instance, and, can buy a lot of data storage and use these tools easily at a very, very cheap way actually nowadays. Actually, it's quite commoditized. So the firms are expected to use these technologies more and more. And coming to your other question, whether human skills will be replaced, I don't think so. Human skills will be very valuable. Machines are good at understanding patterns in short to medium run. However, they they continue to fail to, recognize long-term change or patterns in the processes as well as, investment world.
Okay.
So humans will definitely be valuable aspect of this whole, artificial intelligence and machine learning adoption. However, some of the low value added roles and simple operational roles, they will definitely be automated, and that's already happening as we read the news. IT firms are, kind of, moving people on the bench as they're automating more and more processes, but at the same time they're trying to upskill them
Okay.
in using this latest technology, so that, they take more value added roles. So in the long run, you'll see investment companies, becoming more efficient and profitable as a result of deploying these,
Okay.
concepts. And as they become more profitable, they will actually invest in new growth areas that will create more value added jobs.
Okay.
So in the short run, yeah, you'll see some, low value added operational roles being automated, but in the long run, I think as an industry, as an economy, will all benefit with the help of these new concepts.
Okay. Think we've had a good 45 minutes to 50 minutes of discussion on what the industry is, what the qualifications are, and how the future is going to be. There are a few interesting questions which have come up as we speak. So I thought we'll take a few questions before we wind up. So, see, there's a question. It's from an anonymous attendee. Unfortunately, the name is not there, but it's a good question on what role that forex management plays in investment management. Is forex, managing various, you manage assets across the world. Forex management becomes a big aspect there. So would any of you like to comment on that?
I think I'll pick it up. So as you know, exposure in global investing. So the currency management is very important aspect, as you know, as investors invest globally. You know, as you see, even in India, we have an option to invest in, Nasdaq 100 and S&P 500 index funds, and I'm sure Anil will can add more to that. So the hedging the currency risk is of utmost important, as we try to save investors from any unwanted currency risk. So the forex management in general, from the risk management perspective, also it plays an important role. In addition, the currency is considered to be a separate asset class as well, and we also have developed models to kind of help manage the currency portfolio as a separate asset class and add value to the client. So yes, so forex and the currency management is a very important aspect of global investing.
Okay.
I'll add to that. To be very precise and very clear, yes, currency and forex is typically looked at a different asset class. And if you're running a corporate treasury or like a large bank, then you are dynamically hedging that or trying to make money from that currency management. If you're running an investment management business, like Lokesh gave the example of, many mutual fund houses have funds investing offshore. So to tell you very frankly, in those products, we don't do currency hedging, because there the investor is investing with the intention of getting both the currency exposure movement as well as the movement of the underlying asset class. So typically, if you look at most of the funds, they are denominated in US dollars. And historically, we have always seen that INR has been in a depreciating mode if you look at last historical data. So that increases the returns of the investor also, because the US dollar is appreciating. Plus, the hedging costs are very expensive. If I don't do dynamic hedging, I just hedge and keep for over, like, say, 1 year period. It's very expensive. It will eat up into the return of the portfolio. So unless you are looking at it as a separate asset class, as I mentioned, if you're running a large corporate treasury and you have got large imports and exports and you need to hedge your currency risk, or if you are running a bank's treasury, then very important, and it's a very big market. I mean, much more larger than the Indian asset management industry.
Okay. There are a lot of questions on Mr. Vidushekhar. Probably you could take this question. There are a lot of questions from the audience on whether we spoke about risks, so FRM, or whether you need a CFP when it comes to wealth management, or so what about these qualifications as an add-on?
My advice always to young people is that the marginal utility of every additional qualification going down till you get zero marginal benefit for that next degree that you get. So the other important issue is that if you are already in a specialized function like risk, of course, it makes sense for you to get a credential which is focused on risk. If you're doing project management, then you get a certificate in project management. So, but then there are, something like a CFA is pretty broad, because there are 3 levels and it covers all the different areas of concepts, tools, analytical tools, the synthesis of all those things in portfolio management and so on. So if you are preparing yourself to a long-term career and you don't know where you're going to land up in 3-4 years time, then something which gives you a broader orientation is always better. CFP versus CFA, or rather, if you just ask me about CFP, CFP is easier, because it is it's not as ambitious in terms of its curriculum, and it prepares you to do a particular role, that of the financial planner. But then again, it has its limitations. There is another, the CFA Institute itself has got a certification called the Investment Foundations. Okay, and that is something which is becoming very popular for those who are not currently involved in investment decision making, but who are in support roles. So a lot of people, even including, HR managers, editors, compliance people, lawyers, those who are working very closely with investment managers, they like doing the investment foundations because it gives them the basic knowledge and competencies required to be in that industry without the whole the depth that the CFA program provides. So there are many different options here, and you need to choose the right option based on where you are, what you're doing, and so on.
Okay. This again a good question, but again, we don't have the name. It says anonymous. It's on skills like Python or R or Excel modeling skills. So how important are these skills for this profession? Anyone can take this.
Sure, I'll highlight that and give one or two good suggestions for a young professional to do. In my view, these skills are a must-have. I mean, from my side personally, let's say a few years back, I used to be very comfortable that, okay, I have quite a so-called expert in using Microsoft Excel and I can process large sets of data. But it's now historical now. You can't function without knowing one of these languages. Excel is not able to support for that. So like the simplest right now, fastest and easiest is Python. There is also a language called R, but R is more for like a statistics and research kind of a thing, more for financial markets. Python is the useful language right now. However, I feel that as a young professional, we need to try to look forward. Let's say 15 years back, nobody had heard much of Python, but today it's the main thing. Likewise, 10 years later, when many of the current set of young professionals will be in their decision-making space, that time Python will have become history. So newer languages, for example, one particular language I am also starting to learn now is called Julia. So Julia is an open source language and very easy processing, etc. Frankly, I'm not from technology background, so I don't know very technical aspects, but Julia is the future. It works some like 1,000 times faster than Python and easily can adopt itself to various ecosystems. And it was developed by a very smart team. One of the co-founders is a very dear friend, so I know very closely about it, Mr. Viral Shah, and he worked jointly with Nandan Nilekani to develop the Aadhaar-based entire technology platform. So, a lot of credentials and a lot of large asset managers, including like world's largest asset manager, BlackRock, they are using Julia as a language for enhancing certain processes at their end, etc. So, if let's say one is already knowing the use of Python, wonderful, you progress further on that, but start looking at newer languages like Julia.
Okay. There's one question from Mr. P.J. Govind on the importance of data analytics to the whole profession. So any of you, if you can highlight that.
Yeah, I can take this. So, yeah, Vardhani, I think, see what's happening is, and in a way, Anil also answered this question. See, the amount of data that we are processing to reach the same analytical outcomes, I think that data is multiplying by the day. I mean, just to give you an example, I think, when I used to be an analyst back in my days, 15 years back, we used to have Excel models which will run into maybe, 5, 6, 7 worksheets and maybe 1,500, 2,000 rows. Now I think the number of rows, the number of data itself in an Excel sheet, and the number of assumptions that you're taking and the interlinkages that you're considering, it's gone up significantly. And which is why the need for some of those languages also, because the natural limitation in terms of how much data Excel can process and what is the speed and so on. So you look at more specialized tools, but the moot point is the amount and the quantum of data is leapfrogging every year, and it's going up at an unprecedented pace. The role which you are supposed to play is analyze, synthesize all that data and come up with very sharp conclusions, and your conclusions have to be ahead of the market, better compared to the other market participants. That's how you generate the alpha in the staying in the industry. So data ability to visualize data, understand data, make sense of it. I think that's going to be a key skill set for anybody who's looking at a career in the in the investment management field. So earlier it was, largely when you looked at data, you thought of technical analysis. Now, even within fundamental analysis, I think, data is becoming increasingly more and more critical.
Okay. Okay. One last question we will take on whether there are any investment management roles in the government. That's an interesting question, again, anonymous, but would any of you like to take this? Government jobs, we typically think are like old world jobs, but...
Absolutely, there are many, and there could be many which are not exactly under the government of India directly, but like different divisions of the government organizations, and some of them are excellent, and it can give very good learnings. So there are certain roles which come up. Let's say, for example, in the Ministry of Finance, they are even for junior people, like as a kind of a 1-year trainee courses. There are many courses which come up in the Reserve Bank of India. Where you are. I mean, you have to be lucky to go into which division within that, but there are many roles which then come up into treasury and looking at forex, and like Reserve Bank of India has a very large treasury of money lying overseas as well. So a lot of roles do come up over there. A lot of roles come up in organizations, government sponsored organizations. One of the large ones, which is the NIIF, the National Investment and Infrastructure Fund, NIIF. So NIIF, I remember very distinctly because we were very much involved at that point of time in the very beginning. About 3 years back or 4 years back, it got conceptualized by that time our ex-finance minister, Mr. Jaitley sir. And the NIIF was built out as a government-sponsored fund, almost like a sovereign type of a fund. And now within the NIIF, there are multiple master funds and separate sleeves which are being set up. So large level of hiring has been taking place in that under the aegis of NIIF, over the last 2-3 years. And these type of roles are, excellent. You get the very different type of exposure. You get a very good, how should I say, credentials that, okay, I've worked for a NIIF. It's like a thing of pride to say that, even if it's like just a hypothetically 1-year internship role, it would be wonderful.
Okay.
So there are many such very interesting roles.
Okay.
Yeah, just to add to what Anil is saying, you got the EPFO, which is one of the largest fund managers on the public government side, and then you got organizations such as the PFRDA, even PSUs like if you look at the oil refining and marketing companies. They have a large treasury book. So, these are again the PSUs or the government-backed organizations which, give you a lot of opportunity to have a career in investment management.
Okay. So that was the last question. A big thank you to all the panelists and the audience for taking out time on a Sunday to join us. Enjoy the rest of the day. Thank you very much.
Okay, thank you.
Bye-bye.
Thank you.